What is up, guys? It's Scott with Never Hedge, back for another MMAT update, and today is looking pretty ouchy at 20 minutes from the closing bell here. I would not be can't wait for this trading day to be over for MMAT, but it is definitely a good time to pick up some more shares if you are in a position to do so, because I do not think it will stay down at this price for very long, and we will get to why in just a minute. But let's first go to the RSI, sitting down at 26.8, so definitely into the oversold category right now. MACDs are looking bearish, but again, not much good to talk about other than it being an opportunity to pick up some more shares at a discount. All right, now we're on Fintel. First thing of note, short volume ratio, 32.32%. That is freaking astronomical short volume ratio here today. And we do finally have a short squeeze score uploaded to Fintel. We did not have that for the last couple of days, and we are immediately the third highest ranked stock for the short squeeze score. And so there is a high potential for a squeeze here. We do have quite a few more shares available to short than we did yesterday, but still not a ton at 75,000. And the short borrow fee rate has gone down significantly from yesterday, sitting at a high of 125.15% down to 62.47, so just about half of what it was yesterday. And I do want to get to a couple of thoughts on this. So this is regarding TRCH's failures to deliver from the hedge funds. And so we're going to go over this real quick. Posted by a Chrome Crayon. Love that name. All right. So first off, this is not a post about a squeeze or anything like that. This is a post about blatant manipulation of the market and the SEC's clear disregard for it. Also, because a stock appears on the FTD list doesn't mean jack. You can find millions of shares from TRCH that are FTD. And if you know anything about naked short selling, you should be familiar with the failed to delivers. If not, there's some good market textbooks. We've already covered what FTDs are. So in small amounts, FTDs are harmless, but when they ramp up to, let's say, 300 to 900K blocks of stock within the same 2 weeks, it can really start to hurt the stock's price, which is what we're seeing right now. Unfortunately, all right, he beat me to the punch there. That's exactly what we're seeing with TRCH, and now it's happening to MMAT. And so this is from, these are TRCH's fails to deliver. So we got 900,000 shares from, looks like, first half of May on SEC's website. These FTDs continued onto the latest filings as well, and I will put links to this in the description below. And this guy just submitted a complaint to the SEC and would advise others to do the same if they feel that this stock is being manipulated, which it most likely is. Naked short selling itself is not illegal, but doing so to manipulate a share price is very illegal. And then the next thought here on the potential for a squeeze by Apricot Historical 449. So we're going to be going over naked shorts and how there have been many disputes over a short squeeze that is yet to happen, and why this guy believes it will happen very soon. So once a QSIP changes, the naked shorter has no apparent way to close out the naked short position. No stock under the old QSIP number exists anymore. It all automatically converts to the new QSIP. And so why a reverse merger is the golden bullet. This is Knight Capital was the market maker. This is going to be an excerpt from a document. So Knight was in a rare position of being able to legally sell a stock that it didn't have. The principle being that it will get that stock soon, so no worries. That's called naked shorting. It's illegal when regular people do it. So Deloro suspected that Knight, either on its own behalf or for the clients, made a practice of artificially increasing the number of shares available in a stock through naked shorting, thereby depressing the price. Not doing so results in a fail to deliver, which DeLauro describes as the securities version of an IOU. An IOU comes with rules under the SEC's regulations. Regulations show short sellers have to cough up the stock within 1 day of incurring the fail. Routine failures to deliver can lead to fines by the SEC or even a ban from the securities markets. Instead of complying with the rule, however, DeLauro alleges that Knight circumvented it by manipulating an obscure process within the machinery of the nation's clearing system known as the obligation warehouse. The obligation warehouse simply asks the buyer and seller of these ex-cleared trades if they know the transaction. If they both agree, then the trade gets confirmed with a journal entry. The buyer receives their stock purchase. It actually shows up in the buyer's brokerage account. The trader still has active IOUs, but according to DeLauro's theory, buyers wouldn't clamor for the trades to be closed because they would have already received their purchase. If true, this would allow Knight to bury its own naked short trades. And so here we go into the important part here. Reverse mergers and reverse splits typically result in a change in the QSIP. Once the QSIP changes, the naked shorter has no apparent way to close out the naked short position, and it automatically converts into the new QSIP. Those trades can sit in the obligation warehouse forever in theory, but the aged fails, essentially the orphaned naked short transactions, remain on the naked shorter's balance sheet as a liability to be paid later. So these hedge funds are racking up millions of dollars in IOUs here. And so let's go to the TLDR. A market maker can bury their naked shorts even if the QSIP changes, but it will show up on their balance sheet as an ever-ballooning obligation. Financial regulators should be able to know this, and hopefully they will do their jobs. With MMAT, we could see one of the greatest reverse merger gains because of the sheer amount of shorting that it has been going through. Looking at the chart price for the past week and a half, any short that is not a market maker cannot escape the QSIP change if their short is naked. That is very important. Everyone, please keep that in mind. With MMAT, we could see one of the greatest reverse merger gains because of the sheer amount of shorting that it has been going through, looking at the price chart over the past week and a half. So a reverse merger is the only real short squeeze catalyst that is best for everyone except for the naked shorter. The DTCC rules protect bad actors from the good, but these rules will not trigger any short covering. Only market makers can escape covering a QSIP change by burying their naked short obligations in their balance sheet as sold but not yet purchased liabilities. Financial regulators and auditors should notice the ballooning liability and do something about it. Should being the key word. Whether or not they will remains to be seen. And of course, any hedge funds which are not market makers cannot escape covering their naked shorts. So game theory suggests that any hedge fund which has a chance of surviving covering a small MMAT short position will do so at the first opportunity. Legitimate shorts will also seek to cover as stock performance after a reverse merger is almost always quite dramatically positive, and they may choose to do so at a later date or price. So the SEC's got to do something about this naked shorting situation we have going on here with MMAT, and I think we're going to see some of these hedge funds that are not market makers are going to have to start covering within the next couple of months. I believe the first failure to deliver FTD plus, or the T+21 rule for the FTDs will go into effect July 23rd from the special dividend, and the second second FTD T+21 from the reverse merger will go into effect July 26th, would be that next Monday. So we're going to be keeping an eye out for that. As always, guys, please make sure you're subscribed to the channel for more updates on MMAT as well as other stocks and tokens we like. Hopefully you do not panic sell on this red day and are holding strong, as am I. And I thank you guys so much for watching this far, and I'll see you in the next video.